I still have a dream. It is a dream deeply rooted in the American dream. I have a dream.
Find out the reasons that you do what you do. Find out the reasons that will make you strong, that will make you walk by faith and not by sight.
So it's time to rock and roll, and we are in for an exciting ride. So I'm going to share with you some of the reasons of what I do and why I do what I do, including what the team does and why we are here, actually. And I love that video. By the way, I don't know if you enjoy that video. It's about an hour and a half of some of the best compilations that I've found out there in terms of the different options of motivational stuff. If you don't know me well enough, you know that I love that sort of stuff. So what are we going to do tonight? Now, this is my favorite presentation by a long way. And it's because I eat and sleep this stuff. Some of you have known me for a long time. I literally have been studying this since 1998, believe it or not. So I did my undergrad in 1998 on this. I did my master's in 2001. I've literally spent my entire adult career studying this and trying to understand it. And the very first time I did this presentation was in 2015. And I've done it every year for 10 years since. I can't believe that it's a decade. I truly can't believe that it's a decade. Now, I need your permission because I'm going to ask yourself to strap yourself in. What I'm about to share with you is 3 decades worth of information. And this is a mixture of a huge amount of research. If you know me well, what you probably understand about me is I can synthesize a lot of information. I can understand it and I can try and share it back and contextualize it. But you need to understand that tonight I'm going to give you a roller coaster. And then for those of you that are part of the mastermind, what I will be doing is taking certain chunks of this and making it and going deeper. So a good example is we're going through the 16 trends tonight, but then this month, for the month of August, oh no, we're in the month of April. See, I'm so far in the future already that I can't even get the date right. But for the month of April, we're going to be doing exponential technologies. So although I'm going to be touching on exponential technologies tonight, we're going to do an entire deep dive just into exponential technologies in the month of April, because I feel very strongly that these macro trends are vital to your understanding. So before I get started, most of you should know this, but if you don't, I just want to remind you, there's 4 dimensions to success. And the first dimension is getting the insights, knowing what's going on, knowing what's happening with the trends, etc., etc., etc. I'm not even going to go into the other 3 dimensions right now because that's not the purpose of this talk. But the first one is knowing the trends, and that's what this is all about tonight. So bear with me. We're on for a roller coaster. And if you want to type, go wild. If there's a question that I can help, then I will. So welcome to all of you. It's wonderful to have all of you here. We are trying to do it as a room to make it sort of more intimate and you know, all of that sort of stuff. So we'll see how it goes. Okay. So what are we looking at? It's the 2025 presentation, and it's the 16 macro trends which are intersecting to create a generational opportunity. What's interesting is that something I've never done before, but Garth also spoke about the Wealth Weekend, both in August and now, about the 16 mega investment trends. And what I've done tonight is I've overlaid the 8 technology trends, the 8 societal trends, and the 6 mega investment trends in terms of where we're at. So I'm going to, Alex, if you can just let people in, I'd appreciate it. So I touched on this at the Wealth Weekend about what is Wealth 5.0. And what I'd like to do and what I'd like to share with you is a little video. Now, some of you might have seen this video before, but believe it or not, we actually made this video in 2015. And this sums up the purpose of my life for the last 10 years. And as a team, it sums up the purpose of our team's lives, because this is what we've been trying to put together and building for the last 10 years. And what I'm super excited about is that this is now probably more than 90% complete.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community, a community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, the Wealth Movement. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. WealthUniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. WealthMovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal? To build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors, and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. We are pioneering a global wealth revolution. Join us. Let's change the world.
So join us. Let's change the world. So my first question for you, what is the difference between beginning teaching and advanced learning? So just type in the chat box. What would you say is the difference between beginning teaching and advanced learning? Anyone want to give it a go? I'll give you a little hint here. And I love this here, where you go and learn all the theory, and then you ultimately, you're feeding the doggies and they're all going to sit in a line supposedly, but then you got real life, which is the chaos. And what I'm going to share with you is the evolution that I've been on. Because if I go back one, when I learned about all this technology and exponential technologies, and I went to Singularity University in 2015, like I would have said to you that that it was like this, okay? And then for the last 10 years, I've been heavily involved in this space. And as Derek said, easier said than done. That's exactly it. It's the doing part. It's the actually being involved in it. And we've now been in this space for more than a decade, and I certainly know what works. But I probably even have a better idea of what doesn't work in terms of that process. I'm not going to kind of give you the whole intro because you all know the story about my father. What many of you probably don't know is that I was programming from the age of 6 on a Commodore 64. So anyone that knows technology, in 1984, I was doing logo and getting the little logo to go around. I always, loved Monopoly. And basically what I've dreamed of my whole life is how could we marry together Monopoly and technology and ultimately solve the wealth gap in terms of this process. So I've got another little video for you, and I'm going to be sharing a couple of videos today with you. But this one for me is another goodie. It's a little bit old. Some of the stats aren't up to date, but I wanted to share it with you. Where's it gone now? Tell you what, let me just do it this way around. One of the things I love is that whole thing by Napoleon where he says the right information is 9/10 of any battle. And I wanted to give you an example. So we had lockdown in 2020. It was kind of March, April of 2020. And what's so interesting is that whenever you have one of these things, people kind of get into panic mode because prices go down and people get really nervous. And this is what they focus on. They focus on this part of the curve. But what's interesting is that as far back as 2014, 2015, we've been showing people how user engagement is going to work. So on the left-hand side, you've got consume, participate, transact, and invest. And then on this side, you've got time progression. So in the beginning, people were, consuming publishing, then it was social media, then it was e-commerce, and then it's investing online, which is social commerce. It's a mixture between social media and e-commerce, is effectively social commerce. There's an increase in share of wallets, which basically means that people are using their online wallets. There's stickier money. So what that means is when you open a bank account, I don't know if most of you know this, but it takes generally 15 years when someone opens a bank account to stay in that bank. And then there's annuity income. So you're not just selling one-off products, but you're actually building clients almost for life in terms of that process. Now, what has that got to do with COVID? Well, COVID comes along, and most of my corporate mates had never even heard of Zoom or Teams. They only ever did work by sitting in an office. And then COVID came along, and suddenly all of them had to go online. So they were forced to do adoption. The stock exchanges were forced to go online and do virtual AGMs and everything. And people were like, what's going on? What's going on? But it effectively forced them. So you would have seen this before probably, which is the adoption curve. So in the beginning, you've always got the early, the innovators, then you've got the early adopters, then you've got the early majority, then you got the late majority, and then you got the laggards. So, anyone that doesn't have a smartphone now is in the laggards department. Okay. But when I got my first cell phone back in 1999, my mother told me that I was being extravagant. Okay. Now that's a good example of what I'm talking about. Now, what's also interesting is that people move. So if you take the innovators, they're kind of people that move towards pleasure. They're the people that stand outside the Apple store when there's a new launch of an Apple or sleep all night just to be able to say they got the latest iPhone or whatever. But most people move 4 times more away from pain than they do towards pleasure. 4 times more away from pain than they do towards pleasure. And this is why when you take COVID, it created massive adoption in terms of online, that whole user engagement, and ultimately the drive towards social commerce. So a good example of that is Uber. We've all experienced Uber. So in the beginning, you had the innovators and the early adopters. People like me were like, hey, this is wonderful. Let's try use Uber. And, and basically the taxi owners fought against it and everything else. But as time's gone on, more and more people use Uber. And it's now just become pretty much par for the course that if someone needs a driver, then they basically you use Uber or one of the crowd share people. So what you tend to find at this stage is that you get 2 types of people. You get people that make excuses, and you get people that are resourceful in terms of that process. So the majority of people sit around and they make excuses, and then there are those people that are resourceful and go out and find a way to 4 times more away from pain than from pleasure. Yep, that's exactly it, Judy, in terms of the process. Now, all of these are going to be fundamental building blocks to what is Wealth 5.0. And if I go into it in more detail, and again, at a mastermind level, I'm going to go into this in more detail. But Wealth 5.0 sits in the middle. And number 1 is impact. So what is the purpose and sustainability that you have on the planet? Which one of the sustainable development goals are you actually solving? Number 2 is creativity. How creative are you being, and how much value are you adding in the world? Number 3 is high touch. How much collaboration through smart investing are you doing? So how many people are you reaching in a high touch way? 4 is high tech. How many of the exponential technologies are you using? AI, big data, VR, crypto, blockchain, etc. Exponential technologies. And 5 is digital. This is all about problem solving and future proofing. Now, I want to give you an example. This is our entire ecosystem. We call it a meta marketplace. If you know, Facebook renamed its name to Meta. The reason is Meta is above. So it sits above. So you've got a marketplace, and a meta marketplace is a whole bunch of marketplaces. So if you look at this, you can see that you've got global marketplaces on the inside, and you've got local marketplaces on the outside. You've got real estate on the left. You've got diversification on the right. You've got genres on the left, and you've got community on the right. And what sits in the middle is the technology. So our technology is called WealthPoint, and that's our wallets and our compliance. We went out to start off with, and we built Wealth Migrate. That's the first thing we did. Then we built the Wealth Movement. We started hosting events around the world from about 2014, 2015. Then we built the Wealth University. We needed to have the online learning environment. Then we built Private Wealth Global, which was our high net worth private banking solution, which is available to all the mastermind members. Now we're building out the genres. So this is the whole venture building component, where we're building out the different genres. So whether that's women in wealth, Sharia wealth, farmers in wealth, millennials in wealth, yachties in wealth, etc. It's all the genres. And then once that's built out, we will build out Wealth Create, which is the localized. It'll be very much localized, where people can invest 10 Rand in a local property, etc. And then once that's working, and we're going to pilot that in South Africa first, once that's working, we will then roll that out into multiple other countries. That's the 10-year plan. That's the 10-year vision in terms of what we're doing. Now, to give you an example of this, we started working on this aggressively last year in terms of the process. And this year, the whole idea is to execute upon it. But where you got women in wealth. So for the women, I've got another little video for you. And I love this video a lot. So let me share this video with you quickly. And for the men in the room, just resonate with the women that are in your life.
I remember vividly how I felt when I lost my first tooth, the excitement that came with leaving it in a little box under my pillow, waiting for the tooth fairy to flutter in and wave her magic wand. I woke up filled with anticipation and can still feel the thrill of discovering a 5-rand note in the place where my tooth used to be. Even at that young age, I was contemplating how the gap in my smile was in fact an opportunity to earn extra pocket money. A gap in my smile, but also a gap in the proverbial market. There was something in that experience that made me eager to grow my money without having to wait what seemed like an age to lose my next tooth. As a mom with a smart, curious little girl of my own, I'm often inspired by the audacity and unlimited scope of her dreams, her childlike determination and fearlessness, how she's always searching for opportunities and new adventures. Even now, I'm still looking for gaps, like I did when I was her age, identifying new and exciting ways to grow my wealth. More gaps, more opportunities. I'm thrilled that I found a way to do this with Wealth Migrate. I'm now part of an exclusive circle of people who have direct access to real estate investment opportunities all over the world. Even my daughter can see our investments growing, almost as if by magic, just like that night when the tooth fairy visited me. I'm so proud of who that little girl has become. It all started with something as simple as a loose tooth, and today I can look back, having invested in diverse properties all over the world thanks to Wealth Migrate. Join us and learn from the experts that will teach you how to create financial independence. Get informed and motivated in creating your own path to financial freedom. Register today by clicking on the link. This is for young and old alike. See you there.
To give you an example, you can create community, but actually the digital platforms and everything are built. So you can go here to Women in Wealth, you can literally log in. It's got its own entire investment platform, all built on the same infrastructure. But you go to the marketplace, it's got its own look and feel, uses all the same infrastructure. Then in this marketplace, they can choose. They can choose what deals they want. They could decide, right, they don't like England and they don't have any English deals, or they don't like Donald Trump, they don't have any American deals, whatever. But ultimately, it's their entire own shop face or their own shop to be able to operate. Now, whether it's Women in Wealth or Farmers in Wealth or business owners in wealth or millennials in wealth, all of these that I've just shown you in that little picture are part of that ecosystem. And that's why we say to people, it's the Amazon of personal wealth. That's our whole idea, is how do we help people invest in alternative assets and think of it like the Amazon, where you've got quality. And the question I often say to people is, can you afford not to be part of this? So something I'll share with you at the end is something I'm very passionate about, is we built the entire business through partnership. And we started the Wealth Movement back in 2014. And the whole idea was, how can we create a better and more sustainable planet for all? So we want to be purposeful and we also want to be profitable. And the question I have for people is, do you want to be a partner within it? You know, I'll talk about this later. I'm not going to talk about it now. But there's 4 different stages that one gets involved in a company. The one is in the startup phase, where you don't really know who the company is, you don't know what they do. Then you got the growth phase, where they're going through growth. Then you got the scale phase, which is where Uber and Airbnb were before they basically IPO'd. And then finally you've got the profit, and that's where they've actually gone to IPO, like a Facebook or an Amazon. So I'll share a little poll with you before you know anything else. I would just love to know. There's no I'm not going to hold you to it. I'm just interested, before I even share with you what I'm about to share with you, would you like to be a shareholder? I know some of you already are shareholders, which is awesome to have you here. But would you like to be a shareholder in a business like this? I'm always just fascinated in people's opinions. Okay, so let's rock and roll. What I'm about to share with you tonight is not financial advice, so that's quite important for me to say that. However, this is a culmination of my passion and my research and everything that I've learned in this space. So the very first thing that I need to share with you is, what is an exponential organization? So there's a guy that came out called Salim Ismail, and he literally explained what an EXO was. And the very first thing that's important is that EXOs, so exponential organizations, outperform other businesses by a margin of more than 10. So they outperform them by a margin of more than 10. So they went out and they looked at them, they studied them, they looked at all the EXO businesses around the world, and they put this framework together. Now, again, for the mastermind members, I'm going to deep dive into this when we do the entire session on, I think it's the 16th of April, on exponential technologies. But let me explain it quickly for you. So at the top, you've got MTP, which is massive trans. There's got to be something about why they're trying to change the world. On the right-hand side, you've got right brain. It's about creativity. It's about growth. It's about uncertainty. you basically need staff on demand, you need community and crowd, you need algorithms, you need to leverage assets, and you need engagement. They call it scale. On the left-hand side, you've got left brain, you've got order, you've got control, and you've got stability. You need interfaces, you need dashboards, you need experimentation, you need autonomy, and you need social. It's called ideas. And what they do is there's actually a scorecard. And by the way, put it in the chat box if you want it. I actually have a scorecard where you and your team can go and measure your company, and you can get an EXO rating for you and your company. So if you'd like that, just type in their scorecard, and I'll figure out a way to send you the scorecard. Because any company that wants to be an EXO needs to be doing this test and measuring against this operation. Now, why is this important? Well, if you take a company like the one I'm about to share with you, there was this guy called Ronald Wayne. Now, does anyone know who Ronald Wayne is? Can anyone remember? Has anyone, even from when I've done the presentation in the past, can anyone remember who Ronald Wayne is? James says no. Anyone else? There's a little trick over there for you. Okay, Ronald Wayne, most people don't know this, but Ronald Wayne sold his 10% stake in Apple for $2,300 in 1976. He didn't know where Apple was going. He didn't understand it. And, you know, according to this picture, it's worth $70 billion, but Apple's grown so much in the last 5 to 10 years, that it's worth a hell of a lot more than that. And so this is the difference between an exponential organization. I'll give you a couple more examples. So here you've got Delta. Delta is the oldest airline in the world. It was formed in 1924. It's got a global reach. It's in 320 320 cities and 60 countries. It's got 100,000 people around the world. It's got 800 aircraft and 4,000 daily flights. And the total value of the company is $28.8 billion. You compare that to Uber, founded in 2009. It's in 85 countries and 10,000 cities around the world. It's got 32,000 full-time staff and 5.4 million independent drivers. Its valuation is 86 billion, and it makes 137 billion. That was the latest financials in 2023. Let's go to another. You got Marriott. Marriott, with the biggest hotel group, founded in 1927. It's got approximately 121,000 people that work for it. It's got 8,800 hotels worldwide. The country is in 139 countries. It's got 1.6 million rooms, and it's worth $80 billion. And if you compare that to Airbnb, in 2008, it was founded. It's got 6,811 employees globally. It's in 100,000 cities and 220 countries. It's got more than 7 million active listings. So it's 600% bigger than Marriott. It's worth $83 billion. And yeah, that's the difference between two XOs. And it's so important to actually understand this stuff and how one can participate in them. So let's start to deep dive. When you look at any of these companies, Amazon, Uber, EasyJet, Facebook, Airbnb, Google, eBay, even Bitcoin, etc., there's a couple of things that are really important. The first is that they cut out the middleman. They cut out the costs, and they dramatically increase the trust, the transparency, and the accessibility. So I don't know if you've seen this slide before, but you've got Uber, that is the world's largest taxi company, but it owns no vehicles. You've got Facebook, the world's most popular media owner, but it creates no content. You've got Alibaba, the most valuable retailer, but it has no inventory. And you've got Airbnb, the world's largest accommodation provider, but it has no real estate. What is the one thing that they've all got in common? Come on, I'm going to be enticing your brain tonight a lot. What's the one thing that they've all got in common? Is the chat box broken? Okay, internet, tech, digital. They leverage tech and they own the client. Tech. Yeah, look, you're all right. But the word I'm looking for is data. They're all based on data. They're all data companies in terms of the process. And what's so interesting is that when I was studying this at Singularity University, they said, you know, the one thing to look for when you want to see, let me stop sharing here quickly. When you want to look for an area that's going to have an opportunity. So the first one is where there's a bad customer experience. So think about taxis. Like anywhere you were in the world, there was a horrible customer experience. I'm sure anyone would agree, anywhere in the world. Secondly, it's expensive. So like, again, wherever you went in the world, using a taxi was expensive. And thirdly, it's not a nice experience. Like if any of you have ever gone out in any city in the world, but let's just use London, and you're trying to wave down a bloody taxi and it takes forever and it gets you lost and they're expensive and it's just an all-round horrible experience. And then Uber comes along and they basically make it affordable. They make it pleasant. They make it easy. I don't have to have all these different currencies around the world. As long as I got my credit card, I literally go, Uber, connect me, and I have my private driver. And when you start to look at that, you should start to look at industries where it's expensive, it's a horrible experience, and and it's just shitty. Like people don't really want to participate. And I always say to people, when one looks at some industries, when the Financial Times says investors are driving the property market of 13.6 trillion, what about the property market? Is it easy to use? Is it expensive? Is it a horrible experience? Do you start to see how to join these dots? And the thing I'll say to you is, nothing I'm going to say to you is going to change overnight. I just want to be clear on that. I've invested the last 20 plus years of my life in this process. And but what's interesting is when you look at it with this framework and you say, right, these companies here took industries and revolutionized them. But I think where the real opportunity lies are in industries like property and banking and, the areas where really it's a horrible experience. It really takes a long time and it's expensive. And, at the end of the day, it's not easy. So let's go into this in a bit more detail. This is a great book, which I'd recommend you read if you want to go into this in more detail. Richard Branson said this was one of his best books of the year about 4 or 5 years ago. And I will give you a quick summary of it. So if you take it here, you've got at the top here, you've got the new power model. And at the bottom, you've got the old power model. And then over here, you've got the old power values. And over here, you've got the new power values. On the left-hand side, you've got castles and connectors. And on the right-hand side, you've got crowds and you've got cheerleaders. So let's just use two that everyone knows. You've got Encyclopedia Britannica. Here we are. So that was really hard. Like when I was growing up, if I wanted information, my parents had to be wealthy. They had to go and buy a bunch of encyclopedias. They were sold by door-to-door salesmen. A couple of very clever people were the super intelligent people that wrote Encyclopedia Britannica. And then came along Wikipedia. And Wikipedia has 20 million people around the world. It's a voluntary-based, organization. And any single person that has access to the internet can get access to the best information in the world. Yes or no? So let's take this framework a little bit further, because I'm not going to go through all the companies. So I then took that model, and you're going to learn a lot about me tonight. I take models, and then I build models on top of models to help myself understand what, where, and how. So if you look here, you've got their framework, the old power model, the new power model, and you can see the old power values and the new power values in terms of, sorry, I don't know why this is in black. On the left-hand side, you've got return. So from the bottom to the top, you've got return. And at the bottom, you've got short-term risk from left to right. On the right-hand side, you've got exponential from bottom to top. And on the top, you've got global and purposeful. So if you take Encyclopedia Britannica, it's sitting in this bottom left corner. Wikipedia is sitting in the top right corner. The next one, you go to Marriott Hotels sitting in the bottom left, whereas Airbnb is sitting in the top right. Barnes & Noble, the bookstore, and then Amazon. And then kind of the traditional property companies, and then a platform like Wealth Migrate. Now, people say to me, yeah, there is more short-term risk. And it's right, there is. Because in the beginning, you're breaking new ground, just like in the beginning with Uber, or Airbnb. When you're breaking new ground, there's definitely more risk. But over time, there's actually more risk to stay in this place. Ask Barnes & Noble, who filed for bankruptcy and had to go through a chapter 11 in America. Encyclopedia Britannica that's practically irrelevant. And I guarantee you the way of doing property in the old way will basically go to. And Judy, I'm warning everyone, like I'm not even going to say it tonight, I'm going to overwhelm you because we're going deep and we're going hard and there's a lot to share in terms of this process. So I want to give you another example of what social proofing is. So in 2003, I bought rugby tickets to go to the Rugby World Cup. I lost £11,000. So myself and 11 mates were going. I bought all the tickets for my friends and I lost all the money because of a scam. And so I learned very quickly how to buy stuff online. So I would rather go along on eBay and buy something from someone who is named 7104 Leslie, has done 974 transactions with 100% positive feedback, because I have far more chance of getting my tickets from someone online with that level of social proofing than I probably do buying them from my friend. Are you with me? You've all done social proofing. You've all gone on holiday. You've all checked out restaurants. You've all, literally, we've used it for so many things already. So why would we not use it if we're using it in the e-commerce space? So again, if you go here on eBay, you can go and look at who is the seller, what are their ratings, what is their positive, what's their negative, are they good, do they, blah blah blah. Literally, if this here is Alibaba, they've even got the suppliers. Like, is this a good supplier? How long has the supplier been in business? How many transactions have they done, etc., etc., etc. So my question is, if that is the way it's done in social proofing, why would we not do the same in investment? What about if they were silver, gold, or platinum partner, years in business, number of projects to date, niche focus, amount of money they're investing in the project, risk they're assuming on the project, responsiveness to communication? Wow, that's an important one. Some partners are really good at communicating, some aren't. Timing of dividends, accuracy of returns promised to returns received, ranking of 5. So over time, they actually build a ranking, just like in Alibaba. And again, I'm sure most of you haven't used Alibaba, but they use this diamond thing. So it's almost like an internal thing. So you can actually know how many transactions a supplier has used on the platform. And then you've got recognition systems. You've got badges. So we put together 10 different badges. Everything I'm showing you has already been designed, but not necessarily built. And you could have due diligence. At the moment, we've got one investment committee of people doing due diligence. But what about if you used Wikipedia? So as an example, Wikipedia has 20 million certified. Just by the way, Shona, if you decide, right, I want to go write for Wikipedia, you can't. I'm just picking on you because you're the first person I saw on the camera. But the point being is that you have to be certified to be able to share on Wikipedia. And there's 20 million people around the world. Why could we not do the same thing? Many of you have met Abdul. He knows a hell of a lot about property. If we were doing due diligence in South Africa on a South African partner and a South African asset, why would you not let Abdul do it in South Africa? But in England, you want Gary Sachs to be doing it. Or in America, you want Bruce Sanders to be doing it. So rather than having one investment committee, you've got localized people that know their industry, know their markets in terms of their process. And then what about investor networks? How many of you would like to invest with your tribe? As an example, this might be women. It might be your bridge club. It might be your golf club. It might be your mates. But ultimately, it's where people invest in investment circles and actually participate and engage. A lot of men, I don't know so much about the ladies, I apologize, but like all of those super brew things where it's like, right, what's going on with the sports games? Why could you not do it in the investment space where people could engage and actually do it in investment circles? Now, I could go into this for hours, and I'm conscious of people's time tonight. So if you take the old power behaviors in real estate, you've got complying and consuming. Complying, you're basically trying to comply with what is allowed. And then consuming, you're basically trying to get people to buy your property or invest in your property. But the new power behaviors are sharing, affiliating, adapting, funding, producing, and even shaping. And again, you can go into all of these in more detail if you want to, but you could be part of helping with growing the whole network and communicating. You could be part of the due diligence. You could be a shareholder in the business. You could be producing and actually finding new opportunities, and you could even be shaping the overall trajectory. So what Peter Diamante says is that ultimately you need to point your corporate muscle where the biggest problems are. The world's biggest problems are the world's biggest opportunities. And he literally says, if you want to be $1 billion company, You need to figure out how to impact 1 billion people. Now, I find this fascinating because I was at university, Singularity University in 2015. When I wrote this book in 2013, I'd never heard of that before. And we went out and we did the research, and we figured out that about 1 billion people on the planet have access to residential property. 1 billion people on the planet have access to residential property. And at the time, that was 12.9% of the world's population. And we said, why can we not double it? How can we empower 1 billion people to get access to investing? Literally, because if there's 1 billion people on the planet, how can we get another 1 billion people to be able to participate? And 2 years later, I'm sitting at Singularity University, and they're literally saying, if you want to build $1 billion company, you should focus on a problem where you can help at least 1 billion people in terms of that process. Now, we're going to go into this in a lot of detail when we go into exponentials, but there's a bunch of things here. There's a huge amount of technologies that are converging. And what you need to do is you need to imagine the future. And everything is in the beginning, it looks slow, but the growth is happening. And this is where the disruption happens. But the most important thing to ask is, what are better questions? So this is a very important framework for all of you. So Peter Diamandis teaches this, and it's the 6 Ds of exponential technology. Every single technology goes through this. So the first thing is that an area gets digitized. Then it goes to a period of deception. Then it goes to disruption. Then it gets dematerialized, democratized, and demonetized. Or the other way around, doesn't matter. So take taxis. We used to get to taxi by phoning someone or waving it down in the street. Then Uber came along and digitized it. In the beginning, it was deceptive. A couple of people, driving around San Francisco, a couple of people having a bit of fun. The taxi industry didn't pay attention to it at all. Then it started to get disrupted. And I remember the years, I'm sure most of you remember the years, where the taxi drivers started picketing outside the airports. Probably the stupidest thing they ever did, because suddenly we all saw it on the news and we were like, what's this all about? Oh, wait, we can get a taxi that's better than, or we can get an Uber that's better than a taxi. And ultimately what they did is they dematerialized, demonetized, and democratized access to a private driver. Another great example, if you take your cell phone, think about your cell phone, your smartphone. How many things are in your smartphone? If you're honest with yourself, how many of you owned a camera or video camera? You had a camera, a video camera, maybe you had a compass and a map, maybe you had a little note taker, maybe you had a voice recorder. You owned all of those things separately. I know I did. Now you've got all of them for free in your smartphone. That's what they mean by dematerialize, democratize, and demonetize, because literally you don't even spend any money on it in terms of that process. Is this making sense so far? I know it's a lot, and I know I'm coming fast. Yes? No? So I want to share a tip with you. I had the privilege of learning from this guy, Ray Kurzweil. And Ray Kurzweil is basically the father of AI. So a lot of people call him the father of AI. But more importantly, which most people don't know, he's very good at predicting the future. And I personally had the privilege of learning from him, literally in a room at Singularity University. And he said the easiest way to predict the future. Now, this is a guy that has had an accuracy of greater than 80% in predicting a future of when something's going to happen to the year. I mean, that's quite incredible, actually, if you think about it. And when we were there, we basically, he said, the way that you do this is that you look at long-term trends and you look at things that are intersecting. So he gave the example, and I'll never forget it, where if you take Siri, so when I go, hey, Siri, and it kind of talks to me. So the people that invented Siri, they said, right, what are the long-term trends? You've got smartphone adoption happening. You've got voice activation happening. And you've got AI happening. All three of them are intersecting. And they decided to build the technology to enable voice activation, AI, and something that enabled on a smartphone. That company was bought out by Apple for hundreds of millions of dollars, and they'd only run for a year and a half. Do people know that? It's pretty interesting. Eh? Now, that's a good example of spotting trends so that you can see where the future is going. Another great example was the Netscape moment. So what people don't know is that the internet had been around for a long time. In fact, since the early 70s, some say even the mid 60s. But the only people that could use it were like these computer geeks that literally had no idea what they, the rest of the world had no idea what to do. And then Netscape came out in 1995, and that allowed a user interface which allowed us all to be able to participate in it. And we all know what's happened to the internet. But a little man called Jeff Bezos came along, and he said, well, I'm going to take advantage of this. And when you look at where the internet is in 2025, there's now 5.56 billion people using the internet every single day. 67.9% of individuals use the internet. I'm not going to read all of them. Percentage of females, 65%. Percentage of males, 70%. They spend an average time of 6 hours and 38 minutes per day. And 96% of them use it via their mobile phones. 61% via laptops and desktops. 82% are in the urban population and 47% in the rural population. Now, a little man called Jeff Bezos in 1995 spotted this trend, and he said, hang on, he was a banker in New York, and he said to his wife, right, we're giving up what we're doing. We're literally taking a bit of a gamble on this, and we're going across to Silicon Valley. And what was so interesting is that he literally focused on growth. So he focused on the customers, he focused on long-term, and it's a saying that I love, but he always says, and I know Judy said it came from someone else, I can't remember, but I always put it down to Jeff Bezos, where he always said, it's neither either or, but rather both. So you don't have to do this or that, but rather how do you do both in terms of that process? So it doesn't have to be customers or long-term, it's how do you do both? And one of the things that he said, which I love, is he said to win, you must be willing to fail. You have to be willing to think long-term. And 3, you have to be willing to be misunderstood for long periods of time. And when you look at what's been achieved, he's many times over, he's been the richest man in the world. I know at the moment Elon Musk has taken him out. But what I find fascinating is if you invested $10,000 pre his IPO in 1997, today it'd be worth $20 million. $20 million. That's the example of spotting a long-term trend and taking advantage. Here's another example. I don't know if people know this, but Naspers is a newspaper company out of South Africa. They invested $32 million in Tencent in 2001. And I don't have time tonight to talk about it, but there's actually a long story of failures. So Naspers kept failing in China. They kept failing. And then they found Tencent, and they bought 46% of Tencent for $32 million. It's to this day known as the single best private equity deal ever made because it's made them about $120 billion. So for $32 million, they turned it into $120 billion in terms of that process. $10,000 in 2001 would be worth nearly $60 million today. So if you look at it, in 2000, if you invested $10,000 in Amazon, it would be worth $274 million in 2020. In Alibaba, $10,000 would be worth $108 million. Elon Musk, $10,000 would be worth $40 million. I should update that because it'd be interesting to see what it'd be in 2025 because Elon Musk's obviously gone up more than most. And Naspers was 10,000 for $55 million. Really fascinating when you look at what the impact of these long-term trends are when you create the value. So I think I've given you enough reasons to know why these trends are important. Let's start going through the trends. So there are 8 technology trends. I'm going to go into each one in detail. The first one is blockchain, and it's all about solving trust. The second is artificial intelligence, connecting us to the world's intelligence. The third is big data, algorithms, and quantum computing, helping people with smart investments. The fourth is VR and AR, so virtual reality and augmented reality, and ultimately experiencing reality. The fifth is O2O, so that's offline to online and online to offline, and it's connecting the best in the world. Number 6 is mobile phones adoption and connecting the global economy. Number 7 is 3D printing, reducing costs dramatically. And number 8 is the digital layer, IoT, and bringing it all together. So let's go into each of these. Now, just in my own interest, I always like to tell people, we were the very first platform in the world, real estate platform in the world that was on the blockchain in 2016. There's not many people that can say that. But what is blockchain? And this is the best video that I've ever found for blockchain that explains what blockchain is.
This is the seller. This is the buyer. This is the middleman. Cutting out the middleman can be a great thing, unless you're the middleman. And there are a lot of middlemen or intermediaries out there. Entire industries, such as payments or securities clearing, have evolved to rely on them. Why? Because they establish trust where there is none. They establish ownership, that the seller has the right to sell what's being sold. They attest to history, that there is a clean transaction history. And they certify ability, that the buyer has the money to buy it. All pretty critical details when you don't know the person on the other side of the transaction. Intermediaries know and trust one another. Their business is based on it, so they have more to lose than gain from breaching that trust. But what if there were a better, cheaper middleman, one that didn't add as much cost, complexity, and chance for error? There might be. It's called blockchain, and it has the potential to disrupt the entire ecology of intermediaries. It's a distributed ledger that relies on large networks of computers that redundantly encode transaction data by solving complex mathematical equations. The secure ledger provides an inviolable record. If the history of an instrument is incorruptible and available to all parties, there's no need for a third party to vouch. Blockchain is proof of ownership, history, and ability in non-centralized encrypted form. It's fast, transparent, and free of error. The question is not whether blockchains can cut out the middlemen in complex transactions, but rather which middlemen and when.
So hopefully for the first time in your life, blockchain might actually make sense to you. But what becomes interesting is that what industries are going to get cut out? Like, where are the middlemen the biggest? And it's so interesting because when you look at it, the banking industry, I mean, what is the banking industry? It's literally a bunch of middlemen. That's what they do. And the real estate industry, I mean, how many middlemen are there in a real estate transaction? So it's obvious what's going to happen in the space around blockchain. I'll be frank with you, in 2015, I would have thought by 2025, it would have happened without a shadow of a doubt. So the one thing that's hard to get right here is timing, because these are complex industries. They've got regulations. You've also got very big players with a lot of money that don't want to get disrupted, and they fight very hard against change. So let's just look at some of the interesting things around blockchain. So it's evolving beyond cryptocurrencies. It's becoming the trust layer to the internet, enabling secure, transparent, tamper-proof transactions without the need for intermediaries. In 2025, trust is no longer assumed, it's verified. Blockchains ensures provenance, authenticity, and accountability across industries. Real-world adoption is accelerating. Supply chains are being revolutionized by blockchain. Major brands use it to trace products from origins to shelf, fighting counterfeiting, boosting sustainability, and ensuring ethical sourcing. Healthcare, finance, voting systems, and real estate are integrating blockchain for secure record keeping and identity verification. Just by the way, the UAE wants to be completely on the blockchain by 2030. Digital identity and ownership. Self-sovereign digital identity is rising. Blockchain gives individuals control over their data and credentials. Think healthcare records, credit scores, certification. Ownership is being redefined through tokenization. So real-world assets, real estate, art, revenue are being fractionalized on the blockchain. So imagine real-world property being fractionalized. Institutions are going on the chain. Governments and central banks are developing CBDCs, central bank digital currencies, built on the blockchain for faster, cheaper, and more transparent money movement. Financial services are embracing DeFi, decentralized finance, to cut costs, increase access, and automate trust with smart contracts. And by 2030, experts predict over 10% of global GDP will be stored on blockchain technologies. Finally, we're heading towards a decentralized, trust-based digital economy where every transaction has built-in transparency and verification. It's happening whether we like it or not. AI. So this one's a really interesting one. Ray Kurzweil, the father of AI, said, artificial intelligence will reach human levels by 2029. Follow that out further to say 2045, and we'll have multiplied intelligence, the human biological machine intelligence of our civilization, a billionfold. He actually calls it the singularity, and that's why they call it Singularity University, which is on the NASA campus in Silicon Valley, which is where I had the privilege of going. Now, what's so interesting is that in 2015, to me, artificial intelligence wasn't really a big thing. But when you consider the impact it has on my life now, and by my life, I mean all of our lives, it is truly significant. And ChatGPT, for me, is just a guide of what is actually happening. 15.7 trillion economic contribution by 2030. AI is still on track to contribute 15.7 trillion to the global economy by 2030, primarily through productivity gains, 6.6 trillion, and increased consumer demand, 9.1 trillion. The AI market is projected to grow 33% in 2025, building on a base of 184 billion in 2024. In 2024, over 25% of US startup funding went into AI companies, up 12% just a few years earlier, and this trend is accelerating. Adoption in organizations. 63% of global organizations plan to adopt AI by 2027, and 74% are currently piloting or using AI tools internally. Generative AI, ChatGPT, has boosted workplace productivity up by 126%, especially in coding, writing, and customer service. Workforce productivity. By 2025, AI is expected to displace 85 million jobs, but create 97 million new ones for the net gain of 12 million roles. AI will increase labor productivity growth by 1.5 percentage points globally over the next decade. Consumer and ethical concerns. 76% of consumers express concern about misinformation generated by AI, highlighting the urgent need for ethical safeguards. Training a single large AI model can emit as much carbon as 5 gasoline-powered cars over their entire lifespan. And AI in everyday use. 87% of digital devices now use AI in some form, yet most users don't realize how deeply integrated AI has become in their daily tech. I want to give you an example. So this here is a little picture, and I want to show you something. Oh, I don't have it open. Give me 2 seconds. Let me just open it up for you. So if you use ChatGPT, and I wanted to create a little video thing for my son, Jonty, and I called it Dad's Discoveries. So I said to ChatGPT, okay, go and help me create a picture. So let me just find you here, Dad's Discoveries. Where's it gone? There it is. So interesting enough, when it came out the first time, look how it spelled Dad's Discoveries. Now, I'm a terrible speller. So so you couldn't use ChatGPT. So I had to go and take like the picture, because I quite liked the picture it came up with. And then I had to put it in Word, because I'm not like super good with this stuff. And then I had to go and put like a little like heading over the top. Like you could never use writing. Do you all know what I'm talking about? If you've ever used ChatGPT, you'll know what I'm talking about. Okay, you fast forward that now to this presentation. I did all of that in ChatGPT. I literally went and said, right, go and create ChatGPT. Now, this has happened literally in the last month, by the way. So if I go to ChatGPT here, and I just pull up one of my recent chats, we can go down to Diversification Masterclass, which I did literally this last week. And look here. I created that in ChatGPT. It's even got our logo in it. It's got the time, it's got the writing, it's got the image at the back, everything. That's happened in the last month, by the way. So, I mean, just in the last month, it's just amazing. Again, I created this literally on ChatGPT yesterday. And yeah, I mean, it now spells better than me. If there's a spelling mistake, I certainly don't notice it in terms of that process. So I just use the pictures as a very simple way of showing you how fast this is moving. And I'm literally showing you what's happened in the last couple of weeks. The next one is big data. So most people don't know, like they can't understand what big data is. It's basically all the information out there. They collect all the information, but it's how do you mine the information and use it effectively? So one of the things that we've been really interested in is 10 years ago, I spoke about having the investor test, where we would collect all the information, And then we would put it through our due diligence profile, so our goods system. And then ultimately it would help people do smart investing. Now, I'm going to show you just now when we talk about personalization, because we've now done this. So I spoke about this 10 years ago, but we've not done it because we've literally got the Enneagram and wealth. Okay. We've got kids at the beginning. If you marry the two together, now you truly get smart investing in terms of that process. So that's the next one. What about VR and AR? So you got virtual reality, and then you got augmented reality, which is where you hold up your phone and you've got both what you can see on the phone and you can see in real life in terms of the process. So that's where you got kind of Google Glass and things that you can wear. Now, again, a couple of years ago, you can see my son was a lot younger, but this was the first sort of images that sort of came out. And we had some fun with, that's an alligator and a tiger and sort of a lion, and you could kind of do AR. By the way, you can do this on Google now. If you've got kids, it's fun. Go and play around, and you can like pretend that there's a lion in their living room with them. Most people don't even know about this. But let's go and look at this. So what I want to show you here is now the impact that this is having on real estate. So let's go down to this. Have you heard of this company, Methodology? Let's watch this little video here.
Imagine making the biggest financial decision of your life. Buying property, armed with just a brochure, a site map, and a set of architectural plans. At Methodology, we believe there's more to be done, so we've set out to transform what exists into what's possible, empowering buyers with confidence in their purchasing decisions. We are global leaders in revolutionizing property sales through immersive 3D experiences. With just one click from any social media channel, potential buyers can step into an ultra-realistic 3D model of your development. Buyers can explore the property to gain a complete understanding of its layout and flow. They can customize finishes and explore the development. Familiarize themselves with the surroundings. All from anywhere in the world, on any device. Our platform solves traditional property sales challenges, like attracting more foot traffic, helping buyers visualize finishes, and simplifying the buying process. How do we do it, you may ask? Our formula is simple. We turn every social media click into a live viewing of the perfect property and finished development. Alongside this, we build your property portal, where buyers can enjoy the full building's views and amenities. View available properties, where buyers can enjoy guided video tours before they interact with an agent. Access real-time, on-demand support, with agents conducting walkthroughs directly from their phones or laptops. We capture the magic of each space, accelerating the buyer's decision and confidence. Featuring tools that allow users to remove interior walls to explore layouts, view exact window perspectives using Google Earth satellite scans, customize finishes, experience upsell options, check measurements, and explore various furniture layouts. Methodology transforms static blueprints into dynamic experiences. Buyers can explore not only the property but its amenities, like gyms, pools, and parks, and nearby hotspots such as restaurants and schools. This immersive experience brings the entire lifestyle to life. To create urgency and excitement, buyers are invited to join exclusive bi-weekly launch events. This is more than just another online meeting. It's an experiential online showcase. These events connect buyers directly with the developers, architects, and key team members, providing buyers with the insights they need to feel confident about their decision. And the best part? On-the-spot sales are now possible. All those buyers can secure their dream property instantly through our integrated payment system or connect directly with your sales team for personalized support. Save money on interior designers and 3D renders, as every scene or angle can be saved as a high-end image or animated video, capturing your marketing team's imagination. Still in the planning phase? Bring Methodology.
I just want to stop sharing quickly. We've been talking a lot about real estate. This is actually a good friend of mine. His name's Mike. And can you see the impact that's going to have on real estate? Now, the whole sales process, and all the graphic designers. And basically what they did is they took video games. So anyone that's played video games has the latest in technology and all of that stuff. And they basically took that technology and they built it in to allow you and me to be buyers of property. And think about like the entire real estate industry, the residential specifically, what an impact that's going to have. And one of the things we've been talking to him about is how do we actually integrate that even in what we're doing in terms of the process. So yeah, it's really interesting, and hopefully you can start to see why I say this VR and AR is going to have such an impact. And again, I find this fascinating because the part that I'm finding the most amazing part of this entire thing is that 10 years ago I was talking about it, but now literally all over the place I can find real world examples for you. The next one is O2O. And again, SoftBank, that went out and raised the biggest venture fund ever. Their primary focus was O2O. Uber's the best example. So Uber has online and it has cars. Yep, you with me? Airbnb, same thing. You book your thing online, but it has physical assets in terms of the process. So that's what O2O is all about. And as Roger Hamilton taught me years ago, in 1995, to kind of 2005, you had Web 1.0. Then you basically 2005 to about 2015, you had Web 2.0. And now we're in kind of Web 3.0, which I think most people have heard before in terms of that process. Now, let's just take a real world application that hopefully you all at the launch literally, the launch was last week. Some of us have invested in it before that. But if you take Carefit, like this is classic O2O. They've got a baby carrier that's world-class, got a whole bunch of patents on it, but they've also got an app which has 98% usage by the mothers. So what this does is it creates an ecosystem where people buy the baby carrier, but then they need the app. And then they've got the app, but they need the baby carrier. And so the one thing reinforces the other. They call it a flywheel, if you really want to get into detail. The next one is global connectivity. And this is all happening through smartphones. And again, most of us already know this. But if you look in 2010, 1.8 billion people were using the internet. By 2017, it was 3.8 billion. And their expectation, the expectation is that it will get to sort of 100 capacity. We're not quite there yet, actually. You saw the research that I pulled up from February this year, where they say we're sitting at 5.6, 5.7 billion. So there's still about 2.3 billion people. But if you consider in the last 10 years that there's been somewhere between 2 to 3 billion new people that have joined the internet and new minds, and all of those people have access to knowledge, access to opportunities, access to learning, growing, investing, and everything in between. Another one that I really enjoy is you've probably seen pictures of 3D printed houses. Now, just a matter of interest, you've all heard about 3D printed houses. Have any of you ever seen a 3D printed house? Just type in the chat box if you've seen one. Yes, no? Okay. Well, I want to share a video for you. I was in Atlanta, which is where Patricia is, in October last year. And this is a little video. And I'm not going to play the whole video because it's 5 minutes. But watch this just for a little bit. So, Jaco, I'm here with Jack. And this house here, it's a big shed to be fair, but it can be a low-income house. Tell us just a little bit about it. Like, I know you've just been telling me some amazing things, but I really want Jaco to hear this.
Yeah, so I was a previous builder in another lifetime before I was an attorney. And what we've realized is that stick building is there's just no money in it, and there's no way to do it because of the quality of the wood and everything else. So what we've done is we've taken some Howick machines, which are effectively
so just to look here, so like there it all is. It literally gets like printed here, basically.
Yeah, so basically what we do is we print all the components to the 32nd of an inch with everything dimpled and ready to be screwed together. So you can see it's not just printing steel studs, but everything is pre-designed to go together in a perfect way. So every wall is flush, every wall is square, everything is exactly as it should be. And we can put, for example, one of these up in less than a couple hours. It prints off the machine in less than 30 minutes.
Sorry, did you hear what he said there? So they can put the whole infrastructure up in a couple of hours, and the machine can print it off in less than 30 minutes.
And a house, let's say 1,000 square foot house, we could put one whole frame together in a day easy.
So 1,000 square foot, which is a 100 square meter house, they can put the entire frame together in one day.
We probably do 2 houses in a day. And then we can wrap it, so we finish it off in another 2 days. So every 3 days, we can put about 1,000 square feet out the door.
Every every 3 days they can put 1,000 square feet out the door in terms of.
If it's narrow enough, you can put it on a truck and drive it where you want and lower it with a crane. If it's too wide, we can just do it in panelized sections and then put it together. But this is how we're sort of addressing the affordable housing problem in the United States right now.
2 quick questions which I think are relevant. One was, you said that this is open source software.
Correct.
And we could buy a machine and let's just say put it in Cape Town, and you guys could print basically do the design, and we basically print and build in South Africa.
So all you would do is send us a plan. We would do all of the engineering and stuff here. You tell us where everything goes, every service hole, every duct, vent, whatever you want. We'll make sure it's all done, and at the end of the day, all we do is send you a file. You just push print on the machine, and you can basically make this wherever in the world that you want. So,
and just my last question would be, do you have artisans doing this stuff? Like doing actually establishing it, like putting this together, or?
Yeah, no. So so the beautiful thing about this is that it also cuts down on the cost of labor, because we don't have contractors, we have assemblers.
Okay.
So if you look, I'll show you. If you look, all we're doing is taking pieces that are already pre-drilled and pre-dimpled and effectively just sticking them together.
Got you.
So when we look at it, for example, this is just a build table that we use. This build table, you can see, so each one of the pieces is already pre-dimpled and it's already sunk in and it's already pre-drilled. So I
think you get the point. Now, what's interesting is that I met this guy personally. I mean, you assume you can hear my voice. And they're based out of Atlanta. They can build a house. So it's very difficult to buy a house in Atlanta for less than $300,000. They could build an entire house for somewhere between $50,000 to $60,000. Everything finished. Okay, so all you got to do is you got to buy the land, and then you can build this house. And the best part is they can build it in weeks, not even months, weeks. Okay, and you're not dealing with artisans. You're not dealing, for anyone who's ever done construction like me, you don't ever have to deal with a brickie again and try and make sure that they build the wall straight and all that shit and put the doors in the right angles, etc. This is a game changer. Worldwide, this is a game changer for affordable housing and access to property, etc. Anyway, I can share the video with you. The 8th trend is the digital layer, and it's called AIT, and it's called Internet of Things. So the digital layer is becoming the real world. By 2025, you've got digital twins. So virtual replica of physical assets are expected to be widely used in industries from real estate to healthcare to urban planning. The digital layer is no longer optional. It's how businesses manage and monitor and optimize operations in real time. IoT is exploding in scale. The number of IoT devices will surpass 30 billion globally by 2025, generating zettabytes of data daily. IoT is now the backbone of smart cities, homes, agriculture, logistics, and energy systems, enhancing both efficiency and sustainability. Interoperability, sorry, I can't pronounce these big words, is the new frontier. The biggest shift isn't just adding sensors, it's connecting them. Companies are moving from siloed systems to integrated platforms that share data across devices, departments, and even organizations. Edge computing is rising fast, processing data locally rather than distant cloud centers, reducing latency and increasing security. The impact on individuals and society. Consumers are interacting with digital layer daily via wearables like my watch, voice assistant, smartphones, and more. Healthcare is a major beneficiary. Remote monitoring, predictive diagnosis, personalized treatments are now IoT-enabled realities. Economic opportunities. The global IoT market is projected to reach 1.5 trillion by 2030, and companies master data integration and automation will dominate their industries. So that is the 8 technology trends. Are you with me? That's a lot. Let's rock and roll. What are the 8 society trends? So the first one, social commerce and collaborative investing, increasing returns and reducing risk for investors. The rise of the middle class in emerging markets, the 3 billion unbanked people joining the global economy through mobile adoption and internet connectivity. Globalization and local volatility, creating conditions where investors desire diversification across countries, assets, and currencies. Blockchain and cryptocurrencies, increasing trust and massively reducing friction costs. Social pressure to democratize access to wealth and empower the 99%. Gamification and learning while doing, fundamentally changing the education system. Personalization and personal solutions for themselves and their families, People want the power to create freedom in their lives and have a meaningful connection with their investments. And number 8, investors wanting to have a purposeful impact on co-creating the planet they want to see. Okay, so again, this is a model I built. You can go to LinkedIn if you want to and go and read it. I'll put the link in the WhatsApp group for people afterwards. But basically, if you want to look at it, it's called the evolution of production, marketing, commerce, and compliance. So if you look here, you've got the period, you've got production and marketing, you've got commerce, you've got compliance, regulation, and trust, and then you've got brands, which best represent this time. So in the beginning, and by the way, I did my dissertation on this, so this is why I know all about this. In the beginning, before 1908, you had craft production. So that's where people went out and they built things bespokely. So like cars, they went and built them bespokely. You had individual vendors, compliance was word of mouth, and you had like the local blacksmith. Then you got into mass production, and you had like chain stores, and you had branding, and you had things like the Ford Motor Company. Then you went into lean production, and commerce was about mass marketing. And that's where the regulators came in from about the 1930s. And you had Toyota and Amazon and Alibaba. Then you started to get into social media and fintech and social networks and ultimately Facebook. Then from 2008 to 2015, it was crowdfunding and platforms and social proofing and Kickstarter. But from 2008 to 2017, it became the shared economy. You had digital marketplaces, you had social reputation management, you got things like Uber and Airbnb. Then we started to get into equity crowdfunding. And again, using digital marketplaces. And this is where the Jobs Act, which came in 2013 in America. And you started getting things like Crowdcube and Seeders, etc. From 2014, you had cryptocurrencies coming in and blockchain and the distributed ledger, irrefutable, and things like Bitcoin. And from 2017 and beyond, you started to get into IOCs, social commerce, all of the above, and things like Ethereum. And the future is all about collaborative smart investing, where you bring it all together. Now, I'm going to share with you, I don't have time today, but collaborative investing has been around for centuries, believe it or not. There are 5 principles to collaborative investing, and the kings and queens of the wealthiest people, the kings and queens, have been using collaborative investing. And our whole philosophy is, you got a smartphone, you got a smart watch, you got a smart computer. Why can't we use the principles of collaborative investing, tie it together with technology, and then you've got collaborative smart investing? And that's what Wealth Migrate is all about. So when you look at social commerce and collaborative investing, the old industry is fighting against it. You know, don't do DIY. It might be fun, but it's risky. You know, crowdsourcing to try and save companies that people love. Actually, I should have got one. I forgot about it. Recently, people were trying to buy yeah, Judy, the trademark. You're right. We're trying to buy the Springboks, by the way, through crowdfunding. And that's why Wealth 5.0, you hopefully are starting to see how all of these things start to come together in terms of why this collaborative smart investing, point number 3, is so important. The second one is the rise of the middle class in emerging markets. So we did this analysis, believe it or not, 10 years ago. So you got 2016 through to 2025, and we showed what was predicted to happen in terms of population, urban population, and internet adoption. Because I've already proved to you that those are the metrics, those are the areas where the real growth is happening. We looked at South Africa, China, India, Malaysia, Africa, and Indonesia, because it's the emerging markets where the real opportunities lie. And what was interesting is over this 10-year period, there was a 1.8 times growth. So 1.8 times growth. And if you look here, you've got the UAE and Saudi as well. And the key drivers are large and young populations, population growth, GDP growth, urbanization, online adoption, and fragmented supply. And you might now understand why we opened in China in 2016. We went into India. We're still trying to get into India. We haven't achieved it. But since 2017, we were in the UAE in 2018, been in South Africa the whole time, in terms of trying to get into these markets. Right, number 2, the rise of the middle class in emerging markets. Digital platforms, private markets, and ESG are the future of investing and are already here. And I'm kind of hoping that with this group of people, I don't have to spend too much time in terms of that. Globalization. You no longer just have to invest in the country that you come from. And there's been massive trends in terms of flow of capitals cross-border over the last 10 years, and it's just accelerating in terms of what's happening. And particularly what's happening is with all the concerns that are happening around the world, including America, by the way, and this is Ray Dalio talking about his concerns even in America, is that I'm finding more and more English people wanting to invest outside of England, more and more Europeans wanting to invest outside of Europe, and believe it or not, many Americans wanting to invest outside of America. So it's not just us people living in the emerging world that are in trouble. It's actually people in the first world that are looking to invest into the emerging world as well. And what I've always said is technology can be a bridge of safety. So you can help people invest from the emerging world into the first world safely, but with time, we can also help people from the first world invest into the emerging world safely. That's all about globalization. Number 4, blockchain and cryptocurrencies. So this is an interesting one, and I've been sort of following this, and it has huge swings up and huge swings down and huge swings up. But what's really interesting is that even though you've had these swings up and down, in terms of this adoption, you can see that the overall trend is just onwards. And I taught you already earlier, it's not about the ups and the downs. It's about the long-term trends that you need to be looking at in terms of the cryptocurrencies. So just a couple of things that I found, a couple of companies that I like. Swapping digital assets for real-world real estate is simple. Cross-border real estate investing powered by blockchain. The first real estate stock exchange in the world. Digitization democratize real estate assets? DigiShares for the world. Disrupting the commercial real estate industry. This one here, rent payments automatically sent to investors. So cut out all the middlemen and the management agents and everything else, and do it all on the blockchain. And then, believe it or not, how many of you know that we actually launched our own cryptocurrency in 2017? I've always had a dream that property would be digitized, would be tokenized. And just like Bitcoin effectively doesn't have any underlying value, imagine if you had a cryptocurrency that was backed by property all over the world. So we literally launched the Wealthy Coin in 2017. We got it completely wrong. And we literally launched it as the crash happened in March of 2018. And it was like launching a dot-com boom, launching a dot-com as the boom was happening, and then the bust happened. Just like it fell apart. But the point being is that it's going to happen, I guarantee it. And we've still got the coin. We're just waiting for the regulation because again, I don't have time tonight, but you got utility coins and you got security coins, and we're waiting for the regulation around security coins. Number 5, social pressure to democratize access to wealth. I mean, this is happening all over the world. If you look at the Sustainable Development Goals, number 1 is no poverty, and that's this real thing that people are looking at: quality education, gender equality. There's a lot of things, decent work and economic. So this is all kind of reduced inequalities. There's a whole bunch of them that all relate back to democratizing access to wealth in terms of this process. Number 6, gamification and learning while doing. So this is interesting. What does gamification teach you? I mean, we all learn this from our children that like to play computer games. Instant feedback, okay? Better learning environment, prompting behavioral change, can be applied to most learning needs, impact on the bottom line, and then better learning experience, all the benefits of gamification. So we've actually instituted gamification in our Wealth University. I don't know if you know that, but there's a whole bunch of gamification. And depending on people's engagement and everything else, depends on how they go up or down, or not down, but certainly up, and they get access to new courses, etc. So it's very low-level gamification, but it's certainly where it's going in terms of what I'm looking for and what we want in terms of the whole learning environment. What about personalization? 48% of consumers spend more when their experience is personalized. 90% of marketers believe that personalization is the future, and 74% of consumers get frustrated when content has nothing to do with them. Now, I'm not going to go into this in detail because you all know this, but when you do your 9 steps to generational wealth, one of them is the investor profile. And this is where you now go and get your Enneagram and wealth, and you actually understand who you are as an investor, and you actually get your entire investor report. Then we go along and we basically sit with the family office, and they understand what are all your assets, and then they go to portfolio optimization. So now they understand your individual circumstances, they understand your Enneagram and wealth, they help you put together a model, and then they do your portfolio construction. So many of you have already been through this process, but now you're starting to notice that this is personalization. But what gets exciting is what we spoke about at the Wealth Weekend, is that you've got the Enneagram and wealth, and then that will help the financial advisors drive the ALM, the asset liability modeling, and then that will help know what to invest. So there are 27 different tri-types, and there'll be an AMC, actively managed certificate. There'll be 27 different types which have been set up for every single Enneagram and wealth profile. And hopefully, if you can see where the world is going now, you can literally see that you can now put that on steroids. So at the moment, we can only help you in the kind of the family office or the mastermind level, but you start to marry together big data, and you start to marry together the Enneagram and wealth, and now you make smart investing a reality. The very thing that I've dreamed about for more than 10 years. We're nearly there. Don't worry, I'll just be the only one that gets excited in terms of that process. It's still little pictures at the moment, but actually all the building blocks are now in place. Number 8, investors wanting to have a purposeful impact. The power of impact investing. Do you know what's interesting? In 2009, impact investing was worth 50 billion. In 2014, it was 500 billion. In 2020, it was 1.1 trillion. And in 2025, it's 2.5 trillion. It's a massive growth that's happening around the world. This whole impact investing and investing for purpose. By the way, you don't have to be Mother Teresa. You can invest for purpose and you can have profit all at the same time. So this startup gives renters a financial stake in their apartments, something that I've dreamed of a lot. I spoke to Gary Sachs when I was in London. What about rent to invest? So some people have heard about rent to own. Okay. But what about rent to invest? So what about if you're paying $1,000 a month and every month $100 is going towards owning the building? So you're now not a tenant, but you actually think like an owner. But you might not want to own that specific apartment, because remember, there's 2 massive problems that millennials face. One is affordability and actually trying to get a mortgage and all of that stuff. And the second is they don't want to have to live in that house. They want to be able to travel the world and go from London to New York to Cape Town. They don't want to have to own bloody apartment B16 in London, in North Acton. But what about if they start accumulating assets where when they're paying their rent, it's actually accumulating the assets? So this is exactly what I'm talking to Gary Sachs about in London. I'm like, right, why don't we let the 770 tenants start to participate in the ownership of the building long-term? Now they're not tenants, they're building wealth long-term. Billy, I know you're online. This is the type of stuff that can be a game changer worldwide. And then obviously the women, I've already been through Women in Wealth and the massive impact that's happening around the world in terms of empowering women and the real opportunity of this whole space. I've said to Judy and Patricia and Kelly and multiple others, Susanna, I single-handedly think that the whole women's space is $1 billion opportunity just on its own. And then, the whole thing of digitization, does it democratize access? And I mean, I don't see how anyone could argue that it doesn't. I mean, you can literally go on our platform right now. We can go in, we can log into Wealth Migrate. I can go in, and right now we've got opportunities. Oh, no, that's not the one I want. I changed my login today because I was doing a demo to show someone how to sign up. But you can go in now and you can literally invest in Manhattan from $10. You can invest in London from $10. You can invest in Austin from $10. You can invest in Phoenix from $10. I don't see how anyone could say that this is not democratization, and you're getting access to deals that literally, people, even people with hundreds of thousands, if not millions of dollars, never used to get access to. So a couple of extra bonuses that I just wanted to chuck in for you. One of them is speed. You need to have speed. So you've got to be able to move fast. We spoke about entrepreneurial EXO companies. And again, I'm going to go through that as an entire module for you as part of the mastermind. But you've got to be able to experiment, try things, and if they fail, move on. So even the coin, as an example, that was a very public, humiliating failure. We put it out there, we launched it, it failed. But the point is, we park it, we move on, and when it's ready, we launch it again. You've got to have entrepreneur models. So you've got to be fully digital, data-driven, high-tech, and high-touch businesses. You might notice Wealth Migrate as an example. We're fully digital, we're data-driven, we're high-tech, we've got all tech. But all the time, Alex and I are doing these type of events on Zoom. We're doing high-touch, we do live events, etc. So it's a combination between, I always joke with people, it's about having a digital platform with a human heart. Digital platform with a human heart. They have each pivoted rapidly to navigate crises, cutting what is not working and doubling down on what has. Yes, those of you who've known me for a long time, there's been a few crises along the way, and you've got to get resourceful and figure out a way to find solution. They have high trust with investors, teams, and customers. Their trust account helped them fill their bank account, which gave them the fuel to accelerate out of trouble. This is one that still concerns me. You know, where you constantly like, how can you build more trust? How can we get dividends quicker? How can we get distributions quicker? How can we get communication quicker? It's just like Amazon. The faster you can make things work, the better you can make the communication, the more you build the trust. And finally, you get resourceful. So I did a document again on LinkedIn. You can go to my LinkedIn profile and read all about it. But I basically spoke about the $13 trillion opportunity, where you got technology disruption and you got cultural disruption, and you got real estate sitting right at the middle. And can you see, when you take Ray Dalio, that you've got 8 technology trends that are doing this, and you've got 8 societal trends that are doing this. And in this decade, between 2020 and 2030, these trends are all colliding with each other. Yes or no? Now, I told people this in 2015, and like, I'm quite blown away, quite frankly, because in 2015, it was all theory. It really was a lot of theory. And in 2025, I can give you a whole, like almost all of them, I gave you a practical example. I literally just logged in and showed you. Like real world commercial things that are happening. And in many, many instances, I showed you stuff that we're even doing or using in terms of where it's going. So is this interesting for you? Just by the way, like, I'm sorry, like I could talk all night about this stuff. Like I could literally do an entire workshop on this for a day. But what I want to share now with you is I then overlaid this. So for those of you at the Wealth Weekends, and I'm not sure how many of you saw it if you were online, but Garth Wellman then spoke about, and I've got my notes here just by the way, he spoke about the 8 mega investment trends. Now, I didn't have this before. So what becomes interesting now is I had the 8 technology trends, I had the 8 societal trends, but now if you take a third dimension, now you've effectively got the 6 mega investment trends. And I know it's all big words, but literally these are the ones he used. So the first one was anxious societies. The second was infrastructure. The third was technology. The fourth was the silver economy. The fifth was millennial values. And the sixth was climate change. And just to be clear, what he said was that as an investor, you should be looking for opportunities that sit within one of these 6 trends. And if anyone disagrees with me, if anyone was at the Wealth Weekend and I misunderstood it, please type in the chat box so that I can understand it. Okay, so let's look at anxious societies. And I like this picture of this young lady with her head in her hands, because money has become such an issue for people in terms of the whole process. So what is anxious society? It's affordability. It's being able to live. It's being able to buy a house. The average American can't buy a house until 45. The average person in England can't buy a house until 44. Do you know that? I bought my first house when I was 22 years old. The average person in England can't buy until they're 44, and the average person until they're 45 in America. Employment. How do you get stable employment? You know, with AI and all these jobs that are coming in, people are getting jobs, losing jobs all over the place. How do you get stable employment in terms of that process? And then what about personal security? Like, people are worried, they're anxious, like how do they deal with it, etc. So one of the things that I think that can solve this more than anything is people actually starting to build diversified passive incomes. And even if it's not passive, maybe it's active. but different income streams where they're not relying on one thing, one person, one company. They're getting access when they're a tenant, like I said to actually, owning a piece of that building. They might not own the whole flat, but they're owning a piece of the building so that they start to feel like they're getting on the property ladder and they're not being left out. What about infrastructure? You spoke about smart cities and where the whole world is going around smart cities, telecoms and data centers. I think I've probably spoken enough about data centers, and my wish of all wishes is we can get a bloody data center to invest in. Derek, your diverse income streams, I was like, wow, I'm not trying to figure out what language that was in to understand in terms of where we're at. But I mean, again, infrastructure. In the past, to invest in data centers, if you remember the guy that came along to the mastermind, you needed $400 million. I don't have $400 million, but now with technology, all of us can start to participate in infrastructure. What about technology? I'm not going to waste too much time on this because we've literally gone through the 8 big trends in technology. And I remind you, blockchain, artificial intelligence, big data algorithms and quantum computing, VR, AR, O2O, mobile phone adoption, 3D printing, and the digital layer. And so, I mean, anything in this space in the technology, and, he spoke a lot here about the Magnificent Seven and health tech, and AI is just getting bigger and better. It's snowballing. The expenditures going into it, trillions of dollars in AI and expecting a return. We had a whole debate around the good and bad of AI in terms of that process. But I think we've been through enough technology now in terms of what we're looking at. Number 4, the silver economy, the wealthiest generation ever. So Europe is aging. So is, England, as Clem Sander says, if you put a roof on England, it's an old age home. By 2060, 1 in 3 Europeans will be over 65. Demographic change comes with great opportunity. By 2025, the silver economy is expected to be over 5.7 trillion. And that's just Europe's economy. Active aging to good health allows for travel, work more years, learn new things, and prepare our homes for living independently. Now, what Garth mentioned here was you need to look for things like entertainment, golf estates, care facilities, basically anything that's going to add value to the baby boom generation. And in my opinion here, again, technology enables people to participate. It enables them to get their money working for them. It enables them to be able to take that money and then to be able to travel and to have the peace of mind and everything else in terms of that process. Number 5, millennial values. Alex, this is the one you should run. And this is all about digital natives being able to travel and want to live all over the place. It's about lifestyle and health. And it's, making sure that you're living life to the level that you want in terms of where you're at and not sort of burning yourself out through work. Living in different ways. And then purpose and change, wanting to have a purposeful impact and be part of the change. And, again, I think for me personally, like helping people do rent to invest and be able to start investing from their early 20s and to be able to learn how to do it, learn while doing things like our passive income challenge are all completely in line with what's going on here. And then finally, you've got climate change. And this is, about green energy. It's about nuclear power. And it's about sort of smart food and everything else that comes into that space. So I wanted to share with you something that I believe represents an opportunity, because I want to now take all of that information I've shared with you and I want to share some stories with you. So in 2015, we set out, 2014 to be exact, we set out to build an ecosystem. And we said we need 4 parts to it. We need the Wealth University, which is the learning environment. I started tonight with the digital video. Then you got Wealth Migrate, which is the investment environment. You got the Wealth Movement, which is all about the movement. And then you got Wealth Create, which is where people can literally get started. And there's a book which I highly recommend, which is called Behind the Cloud. And it's the story of Salesforce. And many, many years ago, Salesforce was invented in 1999 and they needed funding. So they went along to the venture capitalists, and all the venture capitalists said, no, you're crazy. No one's ever going to fund you. No one's ever going to have their data up in the cloud. So they went out to their community and they said to them, right, would you like to participate and invest and become shareholders in our company? And they said, why not? We're already using what you guys do. And so based on that, they allowed their clients to ultimately become their shareholders. They built a community-based company. And Salesforce just went from strength to strength. and is worth many, many billions, 60, 70 billion dollars today in terms of that process. So when we found out about this story, we started the whole concept of the Wealth Movement Partners. And we said, right, how do we actually build? We're a community-based company. How do we let people participate in the company, in the growth of the company? And I don't know if people know this, but I actually took this in 2015. So this is what I learned at Singularity University, and it's called the honeycomb. So the strongest element in nature is the honeycomb. And we basically called it the Wealth Collaborative honeycomb. In nature, a honeycomb is the most resilient structure that effectively enables many individuals to access, share, and grow resources among a common good. So at the center, you've got empowered people co-creating a better world for all. There's 6 parts. You've got real estate, you've got technology, you've got investors, you've got vision and mission, you've got exponential, and you've got business. And so my question to you is, would you like me to share with you how I see this all coming together? Yes or no? I've given you all the theory now, but can I get practical if you want me to? I don't have to. I know it all already. Do you want me to share how one can actually, use this basically? Because it's one thing to have the theory, but it's another thing to actually have the practical application. Okay, perfect. So let's rock and roll into this. So this is what's called a pitch deck, basically. So this is the pitch deck that we've got as a company in terms of where we're at. So the first thing is that our purpose, our vision is to help everybody invest like the top 1%. You've all heard me say that 1,000 times. So our purpose is to help everybody invest like the top 1%. Our mission is to make quality alternative assets available to anyone, anywhere, from any amount. Now, previously, if you wanted to do this and you were going through the stock market, you needed to go to a financial advisor who went to a financial institution, who went through an investment vehicle like a REIT, a property fund or a REIT, and then finally it would make an offshore investment. Every layer has fees. There's a lot of exposure in terms of the assets because they're all diluted. The secondary market is subject to price fluctuations, and there's also a massive correlation with the stock market, more than 70%. Or you can try go do it yourself. So you can try go buy a house in London as an example. There's 16 different middlemen between you and your investment. There's very high minimums. I mean, if you want to go and invest with Gary, you're going to need 150, 200,000 pounds cash. That's even if you're getting a mortgage, which basically limits diversification. You've got to have international banking, structuring, and tax. You've got a very long investment cycle. And there's so many hassles in owning property. Rental, management, maintenance, broken toilets. Cherie said something to me so interesting. What did she call it? The toilet and tenant business. You're going to hear me say a lot of that. Residential mom and pop investing is the toilet and tenant business. So the problem is that fewer than 13% of people actually have access to residential property. And of that, less than 1% have access to commercial property. And the reason being is that the primary market, direct investment, has high minimums, concentration of risk, long investment cycle, and management costs and hassles. The secondary market, which is the listed market, has an inefficient value chain, diluted exposure to the actual asset, price volatility, and then limited diversification. So when one looks at the alternative, we've been helping people invest now for about 10 years, and our average return sits at about 14% IRR a year. By the way, it's interesting that the family office, Calio Capital, are exactly the same. If you take the stock market, it sits at about 8%, the long-term average, and private equity sits at about 12%. But when you look at risk, the stock market actually has a higher correlation in risk than private equity. So the question is, how do we get more people access to better opportunities? And that's where the solution comes in. You want to invest directly in an opportunity, and you just go straight through a platform. You got access to primary market and direct investments from as little as $10. No unnecessary intermediaries, full transparency, simple, quick, easy investing done via the platform and wallets. Global investing is vetted and hand-picked in terms of the quality of partners, and the investments are managed with zero hassle. You don't have to go out and collect the rent or deal with the tenants or anything like that. This is our traction over the last, since we launched in October 2013. We now got people in 178 countries. We facilitated $1.3 billion in investments. We've paid out over $31 million in distributions and dividends. And what's interesting is that the average transaction size is about $23,000. So people hear $10, but we've had lots of people put in hundreds of thousands of dollars per deal and even millions of dollars per deal. And we've done over 7,000 transactions. So let's look at progress. And what's interesting here is you can see all the graphs are moving in the right direction. Active investors, number of transactions, total members, active investors. This is actually, I need to update this. This is
Scott, we lost your audio.
Where did you lose it, Alex?
I can't hear you.
Have you got me now?
There we go. You got you back.
So weird. Nothing changed. Okay. What I was basically saying is all the metrics are trending in the right direction. We've got just short of 30,000 members now. We've got 1,480 active investors. This is actually trending up. I think that I need to update that. It's closer to 1,700 now. 11.5 billion invested in the last 3 years. An average return of 14% and 178 countries that have been represented. The unit economics. So I don't know how much people know about unit economics. So I'm not going to go.
It seems like we've lost you.
Shit, man, what's going on? Can you hear me again? Just yes, no. Can you hear me? Okay, I'm just going to try test something here. Okay, how can you hear me now? How are you doing now?
Are the rest of us online?
Yeah, I've got you. Yeah. Okay, we're back. Sorry, everyone. That's the second time it's happened to me today. It happened in the presentation earlier. So I don't know if it's an internet thing. I assume you can all hear me now.
Yep.
Yep. Okay.
All good.
What I was trying to say about unit economics is that I don't want to go into all the detail. Yeah, I can if people want to. But basically, this comes down to your customer acquisition cost, how much it costs to get new investors, how many transactions they do per year, what is the actual transaction value, the reinvestment rates, and the customer lifetime value. And if you really want to understand the unit economics behind the business, this is why things like the passive income challenge become so important, because people actually pay $97 up front. So you can actually create a self-funded marketing machine, because ultimately they are paying to do something to learn how to use the platform. You can take that money, you can reinvest in more customer acquisition. So you don't need to go out and get venture capital to grow the company. It's called a self-funded marketing machine. In terms of our group structure, we basically have a B2C and a B2B. So B2C is business to consumer, which is Wealth Migrate. You all know Wealth Migrate. And then we've got B2B, which is Wealth Point, which is our back-end infrastructure. So when we run Farmers in Wealth or Women in Wealth, or even a white label platform for anyone else, then that all happens through Wealth Point. Again, the technology sits at the middle. You've got access to the global alternative assets. You've got investors. And whether we use our own distribution or whether we use our partners' distribution, everything goes through the middle. And that's why we've got all of these different platforms and partners that we've actually built white labels for and can participate in the deals. A question people always ask is the competitive landscape. And what's interesting here is on the left-hand side, you've got technology and digital wallets. And at the bottom, you've got global focus and compliance. There are a lot of local platforms. So if you live in England, there's a lot of platforms in England. If you live in America, there's a lot of platforms in America. But to our knowledge, there's not one that's focused on global and diversification. We're the only one that sits in this space from a wallet perspective, from a compliance perspective, and from effectively enabling diversification into multiple markets. And so there's quite a really nice it's called a moat, a really nice barrier to entry, because this isn't just about technology. This is 20 years worth of knowing how to invest in England, Australia, America, and doing international transactions in terms of that process. Defensibility. So we got integration into Lemonway. Lemonway is the biggest digital wallet provider in Europe. It took us 18 months to get that, and we're the only one that is outside of Europe in terms of the process. We've got collaborative smart investing. We've got the authorized category out of FCA. We're a juristic rep out of England. We're well established with international networks. So this is the part that's got nothing to do with tech, really knowing what to do and how to do it internationally. We've got community engagement and education. Something that we're lucky with is that, as far back as 2004, we've been standing on stage and teaching people how to invest and to do it and to build community and to do buyers trips and to do wealth weekends and everything. It's kind of core to our DNA. And then finally, we've got a sticky product. When someone invests and then they're getting their dividends and their distribution into their wallet, it's much easier to reinvest than to just go off and to be able to, do something else somewhere else, basically. So it's called stickability. What is the market size? Well, the market size is $1.1 trillion. And at the moment, and it's growing every single year. There's an increasing amount of alternative assets which are coming to platforms like ourselves. And there's a massive shift towards alternative assets. And if you took a fraction of this, just 5% of it, the market size would be 55 billion. And if you literally took 1% of that, the TAM, the total addressable market, would be $1.65 billion. So this is a blue ocean. You're not fighting for even space here, because there's actually plenty of space and a massive opportunity. And then where's the target customers? Everyone's running after the English and the Aussies and the Americans, but the real opportunity lies in the emerging markets. The real opportunity lies in Africa, China, Indonesia, India. Again, large young populations. You've been through this already tonight. I've shown you. Our team, I think most of you know our team. You've got myself, you've got Shane that's running the Wealth University, you've got Alex that's sort of heads up our revenue and our mastermind. You've got Yaku, who's my co-founder. You've got Mersha that runs our tech. You've got Werner that's our head developer. You've got Paula that's our CFO and CIO. You've got Michael Carrick that runs our FCA out of England. And then you've got Lee Rush that still helps with community, although I'd say, Kelly, possibly we need to change that now, because that's something Kelly's been facilitating in terms of that process. And then the last thing I wanted to share with you is that any company, one should be looking at what is the growth strategy. And there's three things that we are looking to grow with. The first is distribution. How do we grow the distribution of our own brand, call it Wealth Migrate, and how do we source new strategic distribution partners? Derek, you are a new strategic distribution partner with Farmers and Wealth. Women and Wealth is a good example. How do we help them grow their distribution? Because by helping, the biggest thing I learned with Uber and Airbnb, the more you help other people make money, the more you help people build businesses, the more you grow together in a symbiotic way. Profitability. How do you increase the conversion of members to investors, increase the number of transactions to investors per year, and initiatives to reduce cost per transaction? You can't see. Huh? Sorry, just mute whoever that is. Okay, thank you. Thought I was getting asked a question there. So anyway, the second thing is profitability. And again, the Wealth University plays a big part in this. And then finally, the technology. Continuous improvements in supporting the technology, European compliance, and for us, automating the KYC process. So we took that as our three major areas. And if you can see here, what we spoke to people about last year was we said that we're raising $565,000. We raised the first about $300,000 of that, and we deployed that. And where we went to was profitable initiatives, technology, and the distribution and compliance. We now are raising the second half of that, and it's a combination of equity and debt. The total amount we're looking to raise is 250. The minimum investment is 25, and there's a difference between the different instruments. Now, I just wanted to share something with you. If you're wanting to invest in equity, which is pure equity, then you would get shares at 35 cents. So you would buy 35 cents. The target return would be 5 to 7 times, and the time frame would be 5 to 7 years. So people say to me, Okay, Scott, sense check those numbers. Well, if you take a 5x return, that would mean the share price would have to be $1.75, which would value the business at $35 million. And it means the revenue for the business would have to be about $3.5 million. Now, we grew our revenue last year by 300%, just to put in perspective. So it's growing all the time. And actually, as a sense check over a 5-year period, it's a very doable. It's not crazy numbers. It's not saying it's worth 500 million or billion or anything like that. It's literally getting it to 35 million. And at a valuation of 35 million, the shares would be worth 1.75. And at $1.75, you would have 5x'd your money in terms of that process. The other option is to go with the debt option. And that's where we've got different levels. So we've got silver, silver plus, gold, platinum, and ultimate. And so at silver, you're getting an 8% interest and you've got a conversion price. So what that means is you provide debt for 3 years, you earn an interest rate, and then after 3 years, you've got the option to convert at a pre-agreed share price. If you don't want to, you get your money back. And then at different tranches, at higher tranches, you get a higher interest rate and a lower conversion price in terms of that. So what I wanted to share with people is that all I've shared all night was talking about the opportunity to participate in exponential businesses and platform type businesses and where the world's going. You know, at the end of the day, if you're involved in a startup where they don't have track record, you don't know who they are, then there's challenges. You want to look for businesses that are in this growth stage, and you want to understand what the capital is being deployed for, why it's being deployed, and how they're going to grow. Then you've got the scale stage, which is where the private equity firms get involved, and then they get IPO'd in terms of what you're looking at. So it's my last lesson for tonight. You've got company value on the left, and you've got time at the bottom. This is the proverbial S-curve that people talk about. In the beginning, you've got startups. Then you've got scaling. Then you've got mature, and then you've got listed. In the beginning, when you funded, you've got founders and kind of seed investors, and then you've got venture investors. And then finally, you've got large funds, and then you've got corporate money. We are sitting, this area here is typically post-revenue, pre-profit. So what that means is the company's making revenue, but not making profit yet. And then over here, they're typically profitable, predictable, lower growth and dividends. We are here right now. This is where we're currently sitting. All the infrastructure is built. Everything that we said we were going to do in 2015 is pretty much built and done. And this is where we're going here. So this is the section we're in. Why do we need the 250? So the original capital we've already deployed. There's a number of things we need. We need to get the European compliance. So we need to move from England. We've got English compliance to European compliance. We've already deployed capital. We're moving to Portugal. We've got our lawyers set up in Portugal, but now we need to roll out that compliance to make that a reality. We need to capitalize the finance and the deals. Those of you that have been whinging, me included, by the way, about the distributions coming out fast enough, we need to capitalize the finance and deals team. And the way to do that, we need to provide Paolo and his team with more resources because there's more and more deals coming, there's more and more distributions coming, and that needs to be processed. We ultimately want to, our next level of technology, we want to bring out mobile technology. So we've got the app and that it can literally be done off a phone. And then ultimately it's about investor activism and evangelism. So that's where we're going. And I wanted to share one final thought that I thought was interesting. If you take Garth's 6 mega investment trends, if you take anxious societies and that whole democratization, I believe we tick that box as what I'm talking about from an investment perspective. If you take infrastructure and getting access to these opportunities like data centers and large-scale buildings in smart cities, we basically tick that box. Technology, I would like to think that, that we tick that box, considering we've been on the blockchain since 2016. The silver economy, you know, this one, and, you know, getting access to aged care facilities and providing them with access to the infrastructure, to the things like the family office and democratizing that. I think we tick that box. The millennials and the values and the digital nomads and allowing the 20-year-olds to participate and invest and the rent to invest and all of that, we tick that box. And climate change, I don't think we tick the climate change box. Certainly not enough to warrant a green tick in terms of, I mean, sure, we've had some green buildings, etc., in terms of what's happening. So, but I don't think we necessarily tick that. But what I did want to share, if I come back to this, is that 5 out of the 6 things, you know, that God said, you know, we are ticking in terms of where we're at. And so I wanted to share another little poll with you. And this poll was all about what I basically shared. And the question would be, are you interested in a generational opportunity? You know, would you be interested in equity or debt? Or maybe you're not sure and you want to speak to someone. You know, what level of tranche would you be interested in? And then finally, would you be interested in possibly looking at not necessarily the holding company, but one of the subsidiary companies, something like Women in Wealth or Farmers in Wealth or Business Owners in Wealth or Millennials in Wealth, because each one of them will be run with the Richard Branson model of being part of a global ecosystem like the Virgin ecosystem, but each one of them will be an owner-led business within the ecosystem. And then finally, your name and your number. So do me a favor, I've chucked up a poll. I'd love to know your opinion based on everything that I've shared. And I wanted to share a little video with you. We made this video a little while ago. And this was a video based on our investors and some of our shareholders. And we asked them one word to explain their experience. And this is what they had to say.
Inspired. Freedom.
Abundance.
Credibility. Enlightened.
Impactful.
Enabling.
Unimaginable.
Peace of mind.
Phenomenal.
Total honesty.
Reliable.
Genius.
Engaged.
Excited.
Hopeful.
Exponential.
Empowered.
Connected. Dream. Innovative.
Global diversity.
Opportunity.
Freedom. Change.
Excited.
Blessed. Empowered.
Incredible. Privileged.
Revolutionary. Super. Disruptive.
Support.
Change.
Empowering.
Excited.
Interesting.
Evolving.
Global.
Opportunity.
Buzzing.
Powerful.
Fortunate.
It's possible.
Work. Community. Inkululeko. Proud.
Transformative.
Fiddle.
Inclusive.
Satisfaction.
Trust.
理想.
Discipline.
Secure.
Proud.
Fortunate.
Excited.
Driven.
Privileged. Community. Spearheading.
Unlimited.
Excited.
I feel inspired.
Partnership.
Future.
Inspired.
Peace of mind.
Excited. Metamorphosis.
Inspirational.
Freedom.
Abundance.
Pathfinders.
Empowered.
Inspired.
Purposeful.
Opportunity.
Engaged.
Passive income.
Transformation.
Generous.
Grateful. Rewarding.
Legendary.
Cash flow. Diversified.
Interesting.
Exciting.
Freedom.
Gives me options.
Empowerment.
Highly innovative.
Exponential. Bold. Opportunities.
Grateful.
Freedom.
Absolutely inspirational.
Leading edge.
Empowering. Adventure. Game changer.
Groundbreaking.
International.
Liberating.
HOPE. Phenomenal. Professional.
Life-changing. Inspired.
Opportunity.
Freedom.
Independence.
Diversified. Peace of mind.
Prosperity.
The future.
Being a wealth partner is empowering.
So I love that video. And, you know, I always say to people, you know, what would be your experience? And if you want to kind of join us, I know I put that poll up, I'll leave it up. But I wanted to share with you some final research, which I think is really interesting. So this came out by PwC, and that was an asset and wealth management report. And what they said, by 2025, assets under management are going to almost double from 84.9 trillion in 2016 to 145 trillion. 60% of these global assets under management are going from active management growth, reaching 87.6 trillion. 21 trillion is going to go into real estate, private equity, debt, which is going to more than double in size. And 25% of global assets under management will see passive management reaching 33.6 trillion. What's important here is that between 2016, it's going from 84.9 to 111.2 in 2020 to 145 by 2025. There's going to be fewer firms managing more assets significantly more cheaply. There's going to be faster growth in Latin America and Asia Pacific. The alternative asset classes, real estate, private equity, private debt, will more than double, reaching 21.1 trillion by 2025, accounting for 15% of global AUM. This is exactly what we do. We're democratizing access to this alternative asset space. And then active investments will continue to lose market share to the passives and alternatives. So that's basically, the passives are things like ETFs, and alternatives are what we do. But the AUM will increase across all three lines. And if you look at the growth here, just year on year of what is expected, you can see the growth in private debt, real estate and infrastructure, and then private equity in effectively the alternative assets. And you can also see where around the world there's this massive growth. So you can see here in North America, in the Middle East, Latin America, Europe, and then the Asia Pacific. So it's really, really interesting. And if you take 1% of those alternatives, so just 1% of 21.1 trillion, it's 211 billion. And if you take 10% of that, it's 21 billion. And if you take just 1% of fees in that, it's over 200 million in revenue per year. And just by the way, if you're doing 200 million in revenue per year, you're valued at $2 billion. Okay. I showed you earlier that the shares will work at $35 million, a valuation of $35 million, which is a revenue of $3.5 million. What is the real opportunity here is that the secondary markets already got democratized. You know, the last 20 to 40 years, you know, Robinhood and all these other democratized access, easy equities and all of them. But the real opportunity lies in the primary markets. And as Tesla said in 2006, so not Tesla, Elon Musk said, first we need to build a sports car. We need to have the expensive thing. Then with that money, we can build a more affordable car. And then with that money, we can build an even more affordable car. That's their thing. And he kind of joked. He said, don't tell anyone. Well, this was the graph. This was the picture that I literally built in 2014. In 2014, our minimum investment was $100,000 per person, per investment. And what we said was, if you look on the left-hand side here, you got sophistication. The sophistication of the investor is going to come down. And then ultimately, the fees and the money you can make can go up. And you can see how this works. Now, today, we still sit here with our mastermind in Private Wealth Global. We've got here, which is our wealth hackers. And then here, we've got the open platforms like Wealth University and Wealth Migrate. We've achieved it. This was what we said we'd do 10 years ago, and this is what we've done. If you take digital wallets, Kathy Wood is one of the biggest venture capitalists in the world, and she said you should value a wallet. You can value a company just based on the number of wallets they got. And she said, according to the research, digital wallets are valued between $250 and $1,900 per user. So if we've got 1,600 investors with wallets, the company's already worth $32 million. Okay, I'm not saying it is, but I'm just telling you the way that she does that in terms of that calculation. So back to getting to 35 million are really not unreasonable numbers in terms of this process. I am recording it, this presentation, so I'll share the recording with people. Then global focus. You know, you've got all of these platforms that are all in America, these in England, these in the UAE, these in Asia, these in Australia, even in South Africa. We're the only one that has a footprint in all of them and can help people actually invest into all of these different opportunities. And then around purpose, we're a purpose-led company that's been driven by community, and we're actually solving a number of these SDGs. No poverty, arguably zero hunger, quality education, gender equality, reduced inequalities. I don't think that one. 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 So it was about 5 that we've actually focused on. But this is a video that I want to play for you because Roger Hamilton is someone that I've worked with. He actually helped me with the idea of Wealth Migrate right up front. And I was interviewing him and I was part of a conference. And I said, what do you think is the future of real estate? And this was his response. By the way, this guy has been one of the more successful people in terms of predicting where the future is going and what is actually happening.
But you have to do that because the democratization of real estate is going to be the biggest change that happens in fintech beyond anything else in terms of it's going to disrupt more than the banking system. It's going to disrupt more than what's happening in stocks and shares. It's going to disrupt because basically property is the one last non-distributed asset. I mean, that's just the basics. It's like the process to buy a property is the most ridiculous thing ever if you actually think about it. And it could be as easy as basically buying a stock or a share, right? And that's what is going to happen for sure.
So
but you have to,
I just want to, he just talks about the democratization and what's going to happen. I started off with this very first slide. What is Wealth 5.0? I will go into it more for the mastermind. But, you've got impact, purpose and sustainability. I've spoken all night about how important that is. I've shown you creativity and how you need to create value. I showed you what happened with some of the other exponential organizations. I've shown you high touch and collaborative smart investing and how important that is. High tech, this is all exponential technologies, AI, big data, VR, crypto, blockchain, exponential. I gave you a quick overview of that. We will go into it in more detail. And then digital, solving problems and future proofing. And I still maintain, in my opinion, the greatest challenge on the planet is the wealth gap. And our focus and our purpose is to try and solve that. So the question I have for everyone is, how can we put smart investing in every single person's pocket? And I believe that what I've shared with you tonight is just the tip of the iceberg. But with yourself, and if we marry it together with the platform, we can make it a reality and put smart investing in every single person's pocket. And I want to finish with a little poem that was literally written back in 2015 for our wealth movement. So it was about creating a sustainable and better planet for all. Imagine a world where most people or all people are literate. Imagine a world where education is par for course. Imagine a world where women are treated as equals. A world where all people have access to investment opportunities. Imagine this world where children will grow up in a family raised in homes their parents own. Because of this, they'll be healthier and have access to healthcare facilities and caregivers. They live in less stressful environments with less conflict in their home. Imagine a world where 6 billion people on the planet that currently live in poverty can live a better life, even if we only help 1 billion in the next 5 years. The wealth movement want to create that world. And my invitation to all of you is become part of the wealth movement, become one of our wealth movement partners, and join the movement. Come and participate. And as you've heard me say this 1,000 times. Nelson Mandela says, money won't create success. The freedom to make it will. And I wanted to finish off with a video from the great man.
I have walked a long walk to freedom. It has been a lonely road, and it is not over yet.
Ladies and gentlemen, that is all from me. It's a solid 2 hours and 15 minutes. I do apologize. My invitation to you is, become a partner of ours, join and become a shareholder in the organization. Some of you are becoming strategic partners with things like Farmers in Wealth and Women in Wealth and golfers in wealth and business owners in wealth and lawyers in wealth and millennials in wealth, etc. But at the end of the day, we're all here on a purposeful and profitable endeavor. And our mastermind is something that I'm truly grateful for. We've got the Wealth Hacker community. We've always been a community-based company. And my invitation to everyone is that we just wanted to extend the opportunity to people. We're only offering it to the mastermind and to the mastermind members effectively in terms of that opportunity. If you are interested, and I know I can see there from the poll, a number of people said to me they'd like to kind of get more information, etc. Either reach out to Alex or myself, and we can kind of go through the details in terms of what that looks like and where we are. I really value your time. I hope you've enjoyed all the different trends. You got me in my complete geek out tonight because this is the stuff I really enjoy. And I want to finish with a video, which is a bit of an upbeat video. It's 1 minute long, which is why we are here. And our invitation to, for you to join us as a partner within the business, it has been a long journey. when Nelson Mandela says it's been a long and difficult journey, that's the understatement of the bloody decade. But as Jeff Bezos says, you need to be prepared to fail and you need to be misunderstood for a long time. And this is why we do what we do. And that's all from me. Thank you very much for your time. I deeply appreciate it. And if there's any questions, I'll look here. I can see there's a whole bunch of things in the chat box. I have left the poll open if people want to go. And if you want to just chat to Alex and I, it's probably easier just to fill in the poll. And then we'll be able to sit down and have a chat. Jeanette asked for, please show the investment options again. Okay, cool. I'll do that quickly, Jeanette. Sorry, I'm just going through this now, so I hadn't seen that. Let me just go through here. Where's it gone? There we go. That's what you're asking for. I assume you can see it. I'll leave that up just while I talk. Okay. Judy said, thank you for the session. I'll be in contact. Okay, cool. Oh, Jeanette's not here. Okay, then I'll stop sharing. Partners together, we can change the world completely. I think this is the point, Derek, is that what I'm trying to do and why I deeply appreciate everyone, and I really appreciate Shanika being here tonight and Alex being here and some of the team that have been supporting us, is that this is a community thing. It's all about collaboration. The more we work together, the more we're going to find synergy. The more we can help Derek create Farmers and Wealth to make that a success, the more that this thing can grow upon itself. Because the best part about a flywheel, which is the concept you learned from Jeff Bezos, is that the infrastructure is built. Like, I don't know if you know this, I actually probably should have said this earlier. Our platform can do 16,000 transactions a second. 16,000 transactions a second. It's currently only done 7,000 in its whole life. Okay. So why this is important is that we can scale completely with no cost. There's no friction cost to scaling. And that's why the more we can help people and help other people succeed, the more that the whole infrastructure can benefit. Thank you for all the kind words. Appreciate them. Derek, and yeah, you asked of maybe starting a movement. I'm going to finish with that video. Let's finish with that, and then we can all go home and have a sleep. So here's the video that Derek's talking about, how to start a movement. Let me just find it for you.
So ladies and gentlemen, at TED we talk a lot about leadership and how to make a movement. So let's watch a movement happen, start to finish, in under 3 minutes and dissect some lessons from it. First, of course you know, a leader needs the guts to stand out and be ridiculed. But what he's doing is so easy to follow. So here's his first follower with a crucial role. He's going to show everyone else how to follow. Now notice that the leader embraces him as an equal. So now it's not about the leader anymore, it's about them, plural. Now there he is calling to his friends. Now if you notice that the first follower is actually an underestimated form of leadership in itself. It takes guts to stand out like that. The first follower is what transforms a lone nut into a leader. And here comes a second follower. Now it's not a lone nut, it's not two nuts, 3 is a crowd, and a crowd is news. So a movement must be public. It's important to show not just the leader, but the followers, because you find that new followers emulate the followers, not the leader. Now here come 2 more people, and immediately after, 3 more people. Now we've got momentum. This is the tipping point. Now we've got a movement. So, notice that as more people join in, it's less risky. So those that were sitting on the fence before now have no reason not to. They won't stand out, they won't be ridiculed, but they will be part of the in crowd if they hurry. So, over the next minute, you'll see all of the those that prefer to stick with the crowd, because eventually they would be ridiculed for not joining in. And that's how you make a movement. But let's recap some lessons from this. So first, if you are the type, like the shirtless dancing guy, that is standing alone, remember the importance of nurturing your first few followers as equals. So it's clearly about the movement, not you. Okay, but we might have missed the real lesson here. The biggest lesson, if you noticed, did you catch it? Is that leadership is over-glorified. That yes, it was the shirtless guy was first, and he'll get all the credit, but it was really the first follower that transformed the lone nut into a leader. So as we're told that we should all be leaders, that would be really ineffective. If you really care about starting a movement, have the courage to follow and show others how to follow. And when you find a lone nut doing something great, have the guts to be the first one to stand up and join in. And what a perfect place to do that, TED. Thanks.
So that's it from me. Anything I can help with? Let me summarize for you, just to summarize what we've been through tonight. I took you through the advances and what happened with exponential technologies and how to spot an exponential technology company. And if you get it right, and it's not just the technology, it's also industries that are difficult, that are expensive, that have a horrible customer service, then you can really kind of get outward returns in terms of the overall process. I showed you how to do that. I then took you to what I learned at Singularity University, where I learned about, from Ray Kurzweil, how you can take trends and how you can look for where they intersect, and that's where the real opportunity lies, in the intersection between all the trends. I then took you through what are the major 8 technology trends and what are the major 8 societal trends. And they're all intersecting in this decade, 2020 to 2030. And I then showed you like real life examples of what is actually happening. And it's amazing to me how many of those now exist. If any of you have seen this presentation, there's a lot more of them that I've been able to put in based on real life experience. I then intersected that, which I've never done before, with Garth Wellman's 6 investment trends. Because now you got the technology, you got the societal, and now you got the investment trends. Because ultimately you want to be looking for the sweet spot that's in the middle of all 3 of those. And then I, with your invitation, I took you through using our company as an example to just give you an example. There's no point in talking theory, to actually show you a practical example and to invite you, if you want to be part of the journey with us and to participate in what we're doing and how we're doing it. And then in conclusion, I literally just showed you some of the long-term forecasts from private, I nearly said Private Wealth Global, from PwC in terms of what they were expecting in the whole alternative asset space. And I'm just super grateful. You know, we didn't know that when we set out back in 2014 to democratize access to commercial property, and then in 2019, other alternative assets. But it's amazing this growth that's happening in alternative assets. And that's, you know, again, it's that epicenter where you got all these things coming together and they're all converging. And when you've got that type of convergence, that's where opportunity lies. So I hope you enjoyed it. I hope you understand both the purpose and the profit of what is possible here. And to those of you who have filled in the poll, thank you very much. We'll reach out to you. To those of you who want to reach out to you, you've got access to me and Alex. Just ping us and we'll follow up and have a chat. And to those mastermind members, I look forward to seeing you on the 16th of April, where I'm now going to start to compartmentalize different parts of this presentation, because it's actually really important to go deep in each one of these if you really want the understanding. Thank you for your feedback. Good night.